Federal Executive Council approves 87 billion naira for roads infrastructure. Senate proposes reform of the capital market. Nigerian stock markets rank third performing best market in the world, and stock markets across the globe advance amidst election uncertainty in the United States. This is Business Express on the network service of the NTA, and we're reaching you from Abuja, Nigeria's capital. I am Leah Katun Baba Tunde. Infrastructure takes pride of place as the Federal Executive Council has approved over 87 billion naira for the construction, rehabilitation of completion of critical roads projects in parts of the country. This is part of efforts at sustaining the nation's trajectory towards addressing infrastructure deficit for enhanced socio-economic development.
Federal capital city, and is going to serve adjoining districts of Mabushi, Kado, Katampe, and Jahi. And it will also generally enhance overall decongestion of traffic in phases 1, 2, 3, and 4 of the Federal Capital City.
We needed to adjust some things in the scope of works, the thickness of the pavement from 500 mm to 560 mm, to also change the asphalt to polymer modified bitumen, and also the shoulders from surface dressing to fully asphalted inside and outside shoulders. So all of this require changes in prices of 47.504 billion, and this has increased the total contract price to 105.
Budget process involves the division of labor within the ambit of separation of powers. The activities at the National Assembly in the last 2 weeks captured this constitutional process. The Independent National Electoral Commission, INEC, and the Nigerian Navy and the Federal Road Safety Commission were at the National Assembly to provide justification for their 2021 budget proposals. INEC Chairman Professor Mahmoud Yakubu presented the Commission's 2021 budget of 40 billion naira. The Chief of Naval Staff, Vice Admiral Ibok Etebas, also defended the 135 billion naira 2021 budget of the Nigerian Navy, while the Corps Marshal of the Federal Road Safety Commission, Boboye Oyeyemi, provided justification for the Commission's 47.7 billion naira budget proposal. Economists are currently analyzing the shape of the world economy and global business will look as a result of the U.S. presidential elections being collated. President Donald Trump of the Republican Party and Joe Biden of the Democratic Party are major contenders. Analysts are of the view that the outcome will have impact on business activities in Europe and Asia, but little impact will be felt in Africa.
But in any which way, the largest economy, as we know today, is the U.S. economy. So whatever happens at the leadership level, the outcome of the election will actually play out, it will affect the global economy, in any which way. So it might either, we might continue to see the trade barriers and the trade war between U.S. and China, or if the Democrats win, there might be a dialogue, and then there might be a compromise here and there, and then things will begin to flow. Because global value chain is something that everybody's propagating, because manufacturing cannot be domiciled in a particular location. Different countries, different locations coming together to bring out product. That's actually what the World Bank and every other person have been advocating for. So the Republican and their policy, America, US first, America first, is actually have been inhibiting, or has been a problem when it comes to that global fraternization that have been happening when it comes to trade and development. So with the Democrats coming to power, there'll be liberalization, and then there'll be free flow of transactions between US and other countries. So it will definitely affect whatever happens globally, as far as the economy is concerned, global economy is concerned.
Now, the historic elections in the United States of America is at a level not anticipated, with two major candidates, President Donald Trump and his challenger Joe Biden, going head-to-head on D-Day. Markets have been reacting due to the vantage point the American economy occupies in the world. So to take a deeper look at the economics of the U.S. elections, I have joining me from London, Jamil Ahmed. He is Director of Investment Strategy at NAGA. Thank you for coming on the program this morning.
Good morning, and thank you so much for having NAGA as well.
Okay, great. So the votes are really interesting, I must say. How is Wall Street and major markets reacting to the process?
It's been bizarre. I think that what's happened over the past 2 days is only fitting for what we've been through in 2020 anyway. Look at the year overall, because there's been a lot of very unforeseen, unprecedented, and completely unpredictable events. And this is another one. In terms of the markets, they're looking more positive now, but we had a complete roundabout. We had a whirlwind. We had ups and downs because there was a complete lack of clarity of what's happening and what's going on. Today, the markets are a little bit more clearer in direction. However, we have to say that even nearly 40 hours since the closing of the votes, we still do not know who's won the race. We think that Joe Biden is much closer to winning than current Republican President Donald Trump, but it hasn't been confirmed yet, and they're still counting major states like Pennsylvania and so on. They still may take up to a couple of days. We can hope by tomorrow we will have some sort of information on who has actually won the race, but it's possible this could lead into next week, especially if the current sitting president refuses to accept the results or contests the election, which he has threatened to do so, which is why markets would be lively and volatile for some time to come. What has helped at the moment is that it appears that the Republicans will hold the Senate. And if Joe Biden is declared the victor, and if it's not contested, Joe Biden has some anti-growth policies over the near term in comparison to Donald Trump. But because the Republicans should hold the Senate, it's seen as being unlikely that he'll be able to raise taxes and implement some of his other policies over the short term. And markets like this idea of gridlock at the moment because there's not much uncertainty. There's not much certainty elsewhere.
All right, and so now we've also seen big techs driving stock market rally. We're seeing, for instance, the Dow setting a 120 years record, with some experts saying the S&P 500 could hit 3,800 points. What does this tell of the investing community?
Investors are more upbeat and positive on but I think that might also be reflected on some of the steep sell-offs we've also seen in the past couple of days and a little bit of a repricing. We do see that for the S&P 500, it does respond on how fast Joe Biden is able to implement his policies, and that would have an impact on those companies' profits. Again, if the Senate is controlled by the Republicans, and if Joe Biden does win, and if he is inaugurated in January of 2021, he will face big difficulties at being able to implement his tax cuts, his other regulation campaign promises as fast as he would have thought. So I think that's why investors are repricing some upward momentum into the S&P 500. But for the Dow Jones and the technology stocks, I think there's a little bit of a tug of war because we also see the lockdowns are continuing. We don't know when the vaccine is going to get confirmed, and it might be because of all of the uncertainty that we've been through over the past couple of days and also this year that investors are just finding some refuge in technology stocks.
Now, this market scenario, how different is it, let's say maybe from the last elections? And is it very normal for stocks to climb astronomically at the peak of the elections in the United States?
These elections are worlds apart, and it's different lifetimes ago. And even if we compare the 2016 election with the 2012 election, we would find a different correlation. I think that generally what we see is America's coming into more uncertainty, because even if Joe Biden does get inaugurated in January, there are doubts over whether he would then have a second term, which is the same as Donald Trump. If Donald Trump does not win the counts and the votes and is not declared the victor, or if he does not contest and he loses this election, he would also have a first term. So I think that's why the markets are behaving more inconsistently to what it would be on policy continuity, because if President Trump did win, and if he did get a second term, we would see a different market behavioral reaction altogether, because it means policy continuity, it means more political consistency as well in the White House. Generally, as per everything else that's happening in 2020, things are changing very fast, even in a very complex political world and a very historic democracy like the United States. We're still seeing some inconsistencies in terms of knowing what's next.
Now, interestingly, also the fear gauge on Wall Street showed less panic, and payroll increases were recorded in the U.S. despite the pandemic. Has the economy insulated itself maybe from the elections fever?
It's a great question. Actually, leading up to the election, we actually saw fear index, the VIX, climb to its highest levels in a good couple of months. And that was in relation to global market turmoil because of the pandemic. And also this anxiety ahead of what we all knew would be a challenging election. It was never going to be clear cut. And this is what time has told as well. I think what we will see and continue to see is, should this election result be contested, or should the current sitting president, Republican Donald Trump, refuse to leave office, refuse to accept the votes, and it does go under a very long Supreme Court process or a lengthy legal process nonetheless, fear index and the volatility should move back up again. So I think that we've had a volatile time in the market over the past week, 2 weeks. I would not be surprised if that continues into the end of 2020, because there's just a tremendous amount of uncertainty, very little clarity, and investors do not know what's coming tomorrow. I think even in this kind of environment, a couple of hours is difficult to understand what's going to happen. So I don't think they can plan for tomorrow or next week specifically. Definitely nobody can plan yet for 2021.
All right, Jamil, how would you describe the U.S. Crude inventories at this time? Does it have anything to do with the elections?
Crude inventories? No, not necessarily. I think that we know that Joe Biden will be more, maybe tougher on the oil industry over the longer term. But generally speaking, the inventories are supply and demand. The inventories are going to move more towards lockdowns and the demand that's coming from the outside community as well. I don't think the inventories and the oil markets will react too specifically to the United States elections.
Okay, now the attention of the world is still on the U.S. Elections, fixated on the U.S. elections, and meanwhile, price of oil is of concern to the world. Is the oil market likely to see much influence from the outcome of this election?
As an event risk, no. But in terms of what could happen in the global economy, absolutely. So we see that there would be more policy continuity and more consistency to global affairs should Joe Biden be inaugurated in January 2021. That could help provide some stability to oil prices and oil markets over the medium and longer term. But generally speaking, until we get a vaccine and until this pandemic has been able to be erased from fear factor, because everybody's still really planning around the pandemic and planning around potential second lockdowns rather than election risk. And I think that would be the key driver then to whether we could see improved oil prices, whether that's $40 or $50 in oil. I just hope that really for those oil producers, you just want to see a stable price right now in oil, because it can get worse than where it is at the moment.
Okay, still with the commodities market, what is happening to precious metals, for instance, gold?
So gold hasn't moved that much this week and has been a bit of a surprise for investors. But I think we also have to take into account what happened during the first wave of the pandemic 6 months ago, because investors were running towards the dollar at one point, and gold, like multiple and the most of the global monetary system, is denominated in dollars anyway. So I think that for as long as investors are still hanging on to their gold position somewhat, gold would not be able to benefit over the near term. But the longer term pictures of a very unprecedented pandemic that's remaining, no certainty at all as to how the current sitting president could react to these results. I think there still is an appetite for stronger gold prices, perhaps back towards $2,000 at some point, but the near-term road is very much unclear.
All right, Jamil, just before I let you go, how do you see the outcome of this election affecting global economy, and would markets maintain this theme we're seeing across virtually every continent?
I think that world markets can maintain the steam as long as these election results are not contested and there's a peaceful transition of order and power. But again, one day could show a different story to this. Generally, when it comes to global markets as well in the world economy, Joe Biden is seen as the more consistent president. But if you wanted a president or somebody who's very business friendly to improve economic fortunes over the near term, President Trump is the one that you would have voted for in that case. And I think that's why US voters were in such a dilemma, because even though the polls suggested Joe Biden would win with a landslide, a mountain victory, the polls have not been right. And the voter count shows how close it has been between the two candidates. America right now is very divided.
Okay, thank you very much, Jamil, for coming on the program. And I must say, may the best man win.
Thank you so much.
Yeah, thank you. So, while the world locked down due to COVID-19 for several months, it was an opportunity for businesses to leverage on technology to metamorphose. With available funding, it was phenomenal for some entrepreneurs right here in Nigeria. And that is the story of Patience Ameje, as shared by her in the series Surviving COVID-19. I started off as an engineer. Yes, I was more into management consulting before now, but I've had a passion for tailoring. I like to wear beautiful clothes. I like to imagine crazy designs on my hair. And then I found out that it was difficult for people to interpret what I have all drawn out in my head. I started 2020 with a whole lot of promises. Like, I had so much expectations. I had so much mapped out. I had so many things I wanted to do and wanted to achieve. And not until March, the COVID-19 thing started crawling in. One had to start thinking, looking for initiatives, looking for ways to do other things. And then I felt, well, why not take myself online? Because it was more of social media, and that's how we started. I didn't have a lot of equipment. You know how it is when you are running a business and you don't have all the required equipment. It looks as if you are incapable, you are not good enough, or you don't have the technical know-how. So the Ask Me loan was a very timely thing for me because it came when I needed it the most. By the time the funds was released to me, I was able to acquire everything I needed and even more. I got computerized machines, sewing machines. I got industrial sewing machines. I was able to get a whole lot of things. When I got the loan, I felt, why not add this to one of the things I do? I made inquiries and I found out that there are actually EDIs, Entrepreneurship Development Institutes, that are required to train people to be able to apply for this loan. And I felt, well, this is my field. Apart from the tailoring, I've been a consultant like forever. And Central Bank is also one of my clients for learning and development. So I applied and then I was given the opportunity. Now, I don't just train people
to apply for the loan. I also make them understand, because I've been there, I've collected, I know the processes, so it's easier for me to communicate and pass the message across to people.
The African Export-Import Bank, Afreximbank, has partnered with the International Islamic Trade Finance Corporation, ITFC, the trade finance arm of the Islamic Development Bank, ISDB Group, and the Arab Bank for Economic Development in Africa, BADIA, to launch a $1.5 billion collaborative COVID-19 pandemic response facility, COPRIFA, to support African economies with rapid financial assistance to enable them reduce the impact of COVID-19. COPRIFA will be accessed by eligible central banks, commercial banks, and businesses to finance the import of medical supplies as well as agricultural equipment and fertilizers essential for addressing the processing food production deficit. COPRIFA is also designed to support African economies to overcome a myriad of challenges, including commodity price shocks, a significant drop in tourism, and disruption to supply chains and export manufacturing. It will also address the sudden declines in financial flows, including a drop-off in trade and project finance, migrant remittances, portfolio investment, and foreign direct investments. The Senate on Wednesday disclosed it would rework capital markets laws to generate more revenues for the nation as part of efforts to revive the economy, which has been negatively affected due to the outbreak of COVID-19 and the recent EndSARS protest. Chairman of Senate Committee on Capital Markets, Senator Ibikunle Amosun, in his address at the 2021 budget defense on Wednesday, noted that there were challenges militating against Nigeria's capital market that has affected its greatness. He urged stakeholders to embrace the development in the interest of investors and the nation in order for people in the Nigerian capital market to move into greatness. He stressed that economic challenges were not peculiar to Nigeria but the entire world, particularly those that were occasioned by COVID-19 pandemic, adding that to revive the economy, it should be a cooperation of all. Meanwhile, the equities market stocks advanced marginally in mid-week trading session. The NSE All-Share Index inched upward by 0.3% to close the session at 30,741.88 points, and market capitalization also resumed this morning at 16.068 trillion naira. 286 million shares were traded Wednesday, valued at 3.094 billion naira in 2,889 deals. Access Bank dominated volumes with more than 145 million shares traded in the course of the day. It was trailed by a very distant Zenith Bank and UBA. The market is expected to sustain gains this Thursday on improved investor sentiments as government calls for precautions against second wave of COVID-19. Worthy of note is the fact that in the month of October alone, investors made a gain of about 1.934 trillion naira as the Nigerian bourse recorded its best monthly gains since 2018. Now, investors' focus on Thursday likely remained on the U.S. election, though official tallies say a call in the presidential race is not expected anytime soon, as several states could take until later this week to complete official tallies. Boste Abel has a summary of markets performance this morning.
U.S. stock index futures were higher in early morning trading of Thursday, 5th November, as investors hope that the winner of the U.S. presidential election would soon be determined. Futures contrasts tied to the Dow Jones Industrial Average rose 188 points. S&P 500 futures and Nasdaq 100 futures both also traded in positive territory. Stocks in Asia Pacific were higher in Thursday trade as investors continue to wait for the result of the U.S. election. Hang Seng Index led gains among the region's most major markets as it surged 2.54%. Nikkei advanced 1.73% and Shanghai Composite also topped 1.26%. European stocks are expected to open broadly higher Thursday as election uncertainty continues in the US. London's FTSE is seen 9 points higher at the open at 5,883.26. DAX 38 points higher at 12,324.22 and CAC 40 up 13 points at 4,922.85. The election trend affected most African stocks which opened negative in early trading, with Nairobi's all share, Namibia's overall index and Tunisia's Tunidex depreciating. Ghana's GSE composite was marginal, while South Africa's JSE Africa Top 40 posted gains. Bossade Able, Business Express.
And quickly, let's take a look at prevailing rates in the morning market this Thursday. This is where we end this edition of Business Express. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now. Don't forget to use the hashtag #ItIsBizEx. Business Express returns Friday at 3 p.m. I am Leah Katungbaba Tunde saying, be safe out there.